Halifax real estate has officially hit a turning point. For the first time since the fall of 2019, we have over 3 months of listing inventory. This changes everything. It means that buyers have more homes to choose from. However, at the same time, sellers are holding out for max dollar. In this video, I'm going to give you a market update year to date up to the end of August. I'm going to talk about the latest numbers. I'm going to discuss a little bit about what's happening in the luxury real estate market, which based on the August numbers may shock you a little bit. And I'm going to talk about my outlook for the fall of 2025. But just before I get into it, if you're new here, my name is Andrew Stevens. I've been a realtor in Halifax for over 10 years and I've sold over 500 homes. And if you want to be educated on the Halifax real estate market, then hit that like button and hit that subscribe button. And if you're thinking about making a move in the HRM and you'd like to get in touch with me, you can reach out to me anytime in the Calendly link below. So I'm going to quickly run through the numbers here and then I'll talk a little bit more about what we're seeing on the ground level. So far year to date, January 1st to August 31st, we've had 3,652 sales across the HRM, and this is up 1.7% from this time last year. Now, in terms of the average sale price of these homes, this has also gone up year over year. Currently, we're sitting just over $602,000 year to date for an average sale price, and this is up 4.2% over the same time period in 2024. So at this point in the year, we're selling more homes for more money, and the average market time is 33 days, which is even with last year. Now, the big one is the listing inventory, which I mentioned in the intro. Right now, we have about 1,350 active listings on the MLS across the HRM. And this has us sitting at 3 months of listing inventory. Now, why is this important? Well, as you know, if you've been following along my channel, a big part of the housing crisis that we have here in Halifax has to do with simple supply and demand. And for the last 5 years, there haven't been enough homes for sale based on the buyer demand in our market, which has obviously increased a lot over the past few years. So 3 months of listing inventory is still a seller's market, but it is starting to approach what I would consider to be a balanced market. And we haven't seen 3 months of listing inventory in the HRM since about October, November of 2019. So it's been a minute since we've been here. This is good news for home buyers. This is something that is, encouraging to see overall. I think there's a bit of a mixed bag of reviews of whether or not, realtors actually enjoy this like hot market that we've been having. And the answer is I would rather see a more healthy real estate market, which to me would be more of a balanced market, somewhere between about 4, 5, 6 months of listing inventory. But seeing this inventory level rise is a good thing overall for buyers. It means that buyers have more to choose from, but at the same time, like I mentioned in the intro, sellers are being a little sticky with their price points, and we're going to get into that in a minute. Now, one thing that I found very interesting is in August, the luxury market in HRM was absolutely booming. In August of 2025, we had 26 sales in HRM over $1 million. 8 of these were over $1.5 million, and 2 of them were over $2.5 million. Now, for context, comparing that to August of 2024, there were only 14 sales over $1 million, so 14 compared to 26 this year. There was 3 sales over $1.5 million, which this year was 8 sales. And there was no sales higher than 2.2 million last year. And this year we had 2 that were over $2.5 million. So this is really interesting to me because obviously the high price points have been a little bit slower and a little bit more of a buyer's market as of late compared to, let's say, the more affordable price ranges, especially when you get kind of under that $600,000, $700,000 range. But this is pretty crazy to see. Call it a fluke, call it whatever you want. It's not something I would consider to be super typical in our market, but the luxury market in August of 2025 was apparently thriving according to the data that I'm looking at on the MLS, which I just found really interesting because, again, a lot of those higher price points are certainly slower than something that is, say, $700,000 and below. So what does this mean for you if you're looking to buy or sell a home? And what are we seeing kind of on the ground level when we're out there working with our buyer and seller clients? Well, for starters, the increase in inventory is certainly noticeable. From a buyer side of things, they have more to look at. Obviously, depending on kind of what market and what price point you're looking in, some are very tight in terms of inventory still, but there's more in general for buyers to look at. They're being a little bit pickier, they're being a little bit more cautious, they're being a little bit more patient. Meanwhile, sellers seem to still be waiting it out for top dollar. They don't seem to be, kind of breaking down and dropping their listing prices to the level that you might expect to see in this situation. So it's sort of at a standstill a little bit. I would say it is frustrating overall for both sides of the transaction. I would suggest that a lot of sellers are hoping for price points that are kind of possible, but not probable, price points that maybe we would have seen in the peak of the pandemic. And it's not to say that average price points aren't higher now than they were then. They certainly were, but we're not getting, that same level of competition that we were getting before during the pandemic market. I would also suggest that buyers right now, in my opinion, are more educated than ever. There's more resources out there for them to kind of research the market and understand the market. Most buyers are working with agents, and that's helping them as well. You have sites like Viewpoint and Realtor.ca that are now showing things like sold data. You have more agents doing market updates like this video that I'm doing now. So to me, I'm seeing a lot more educated consumer out there, a much more educated buyer. And that being said, those buyers are not going to overpay for a property. So just because a seller wants a certain price does not mean a buyer is willing to pay for it. Market value is determined by what a buyer is willing to pay and what a willing seller is willing to accept. And where that meets in the middle would be the market value. So what I'm seeing is, regardless of the price point, regardless of the area, the good product that is priced properly and priced where it should be seems to still be selling relatively quickly for top dollar. And if people are kind of shooting for the moon and overpricing their homes, then they're likely going to sit. Obviously, some markets are hotter than others, and this is an overall kind of general HRM market update. So if you have any questions about your specific neighborhood, don't forget you can reach out to me in the Calendly link below in the description. You can book a meeting with me anytime at your convenience. Now, looking ahead to the fall, there's a few things to consider if we're looking at, kind of an outlook of what is coming for the rest of 2025. So we're middle of September now. I'm filming this on September 17th. It's early morning, and later today there is a interest rate announcement from the Bank of Canada. A lot of what I've been reading, a lot of what I've been hearing is indications that they may drop the overnight lending rate, which is, in theory going to help buyers, especially if they're taking a variable rate. So that affects the variable rates, not the fixed rates. So interest rates may be coming down a little bit, so that might relieve some pressure. Overall, this would be a good thing in theory, yes. Is this going to have an impact on home prices and drop home prices? In my opinion, no. If anything, it'll add some demand to the market, which could have the opposite effect. It could have upward pressure on pricing. I don't necessarily think that's going to happen, but I do think rates are likely to come down just a little bit in terms of the Bank of Canada side of things. Fixed rates seem to be hovering in the same place, give or take, over the last several months. So overall, historically speaking, that's still relatively low. You're looking at, somewhere around a low 4% on a 5-year fix. So interest rates is one metric to watch for sure going forward. The other one is inventory. Like I said, inventory has been rising. This is huge for our market. The level of supply going up is a very good thing for buyers. However, I would say it is still leaning towards a seller's market just slightly right now. I wouldn't say we're quite at a balanced market yet, but I wouldn't be surprised to see the level of inventory continue to rise going into, October and November. It'll probably dip a little bit in December and January, but I'll be curious to see where that goes. And that's going to have a huge impact on what comes next. So if the interest rates start to go down a little bit and the inventory starts to go up a little bit, what is going to happen with price points? Well, I would suggest that we could see a bit of a softening on price points. I think it's going to hover right around where we're at now. At the start of the year, I made a prediction that it was going to finish the year slightly above 600. Right now, we're sitting at 602 as an average. So I'm pretty in line with my prediction at the start of the year. And I would say I'm going to stick to that. I think it's going to stay relatively where it's at. Could we see a bit of a softening in some markets? Yes, absolutely. Do I think that the popular neighborhoods are going to lose any steam? No. In my opinion, if anything, they're going to continue to go up. I think there's a lot of pent-up demand for getting into good product in good neighborhoods, regardless of the overall price point of things. But this is something to watch going forward for sure. Might see a softening, but I can tell you right now that I would not expect to see a collapse or a crash or the market tank. tank or anything like that. It's not like I'm going to be on here in November and December saying that the average price point is 525 versus the 602 that it is now. That's simply just not likely to happen. So all that being said, the bottom line is that Halifax real estate is changing, but it's not collapsing. Buyers finally have more to choose from, and sellers may have to adjust their overall pricing strategy going forward if they want to see a successful sale before the end of the year. Now, if you get any value out of this video, all I ask is that you hit that like button and hit that subscribe button. And if you're thinking about making a move in the HRM, don't forget you can reach out to me anytime in the Calendly link below at your convenience. You can book a meeting or a call with me. And until next time, thank you so much for watching. I really appreciate your support, and have a great day.